A couple of things we want to talk to you about. Why don't we start off with just your initial reaction to banking regulators essentially telling lenders to be a bit more careful? How do you think that changes just the funding, appetite for funding in the industry?
Yes, first of all, thanks so much for having me, and also Happy New Year to you too. I think, reading more into the statement that was issued, they did make a point about they're not necessarily directing banks in the US or, by proxy elsewhere in the world to walk away from the crypto industry or to walk away from banking the crypto industry per se. They did make a specific call out in that statement around risk management and this perception of lax risk management. And certainly when you look at the previous story around SBF, there are questions around the risk management at FTX and other large-scale crypto exchanges. But likewise, I think that is a gap that has been identified by some of the players in the industry. Certainly here in Australia, when we've been making calls for increased regulation of digital currency exchanges such as ourselves. So there is an understanding within the industry of the importance and the need for this risk management piece that certainly would have provided greater oversight and potentially comfort to investors who use the FTX platform, but also for the wider banking industry, so that they're not importing that contagion, if you like, and certainly that was what was described in that statement, importing that contagion into the mainstream banking system.
And I'm just wondering, just given the latest when it comes to FTX, he's pleaded not guilty. He continues to kind of sideline himself from what really was happening. I guess his defense, and he's been saying it on Twitter, is that, look, I didn't know this was all going on. How are you viewing this whole sort of saga, which looks like it could be quite a courtroom showdown? And what do you think should happen to Sam Bankman-Fried?
So I think that overall for the industry, seeing it played out on the Twitter megaphone is particularly disappointing. I don't think that investors are going to get any kind of salvation from what Sam Bankman-Fried is saying and others are saying about it. I think if anything, it's continuing to muddy the waters and serve as a distraction away from the real problem that the investors at FTX were facing. So I really don't like the fact that this has been a decision made by a public jury rather than an actual court of law around what's happened. I think in some respects, it certainly accelerated the regulatory conversation, and that's something that the industry, as I say, has been calling out for, but also that investors need. And I think perhaps in years to come, we'll look back, as a crypto industry, as a more mature digital asset industry, and point this out as being a pivotal piece, a pivotal turning point, if you like, for us as we, move the industry forward. The industry itself is not predicated and built solely around the actions of FTX and others within the industry. It's a much broader, far larger scale enterprise than just one in particular. And I think that we're certainly going to move forward and push forward with it as an industry as a whole, and learn the lessons that we need to from what's happened here.
Yeah, I mean, to your point, the first reaction from regulators will almost likely always be more regulation, and the industry obviously will say we welcome more regulation. It's somewhere in between. What do you think? What would you welcome as far as regulation that you think is appropriate but doesn't also hamper innovation and development?
Yeah, and I think, that's it really in a nutshell. It's about being pragmatic and recognizing the risks as they exist. What happened with FTX wasn't anything to do with cryptocurrency per se. Instead, it was a very human flaw that kind of rotted that organization from the inside out, if I can make such kind of statements. So it's those human flaws that we can focus on when we're talking about regulation. And I think that's something that we can see, models of that already exist, lessons that we learn from traditional finance can certainly be applied in that sense to the digital currency exchanges and other kind of crypto institutions. So, that piece shouldn't be too complex or too complicated to work through. It's when you start moving into trying to regulate the crypto itself that things can come unstuck due to the varying nature of cryptocurrency and certainly the pace of innovation as it's progressing through. And certainly I think that's a story that's going to absolutely continue into 23 and beyond, looking at things like soul-bound tokens, the real-world assets being tokenized and so on. Those are going to be far bigger issues. So getting the bedrock down right now, in terms of regulating these human flaws and behaviors, that's the fundamental piece. I look at what Europe has done. The European Union over the last couple of years has been working together to put together its markets in crypto assets. And that's coming into effect. That regulation comes into effect in 24. They've been very pragmatic. They've said, we're not going to regulate innovation out. We're going to regulate innovation in. And I think that in that spirit that other regulatory bodies around the world can look to move forward.
So do you think crypto can make a comeback this year, Caroline? And what would it be contingent on? Is it that institutional money has to come back, more regulation? What's really needed still?
I think in some senses, the fact that the heat has gone out of this crypto trading cycle is probably a good thing. I think it gives, for founders and those who are innovating within this space, enough time and headspace, if you like, rather than chasing the market waves. Instead, they're getting a chance to really focus on the projects that they're working on. And certainly, you made reference to institutional movement. If you look at the likes of JP Morgan, whose CEO is notoriously critical about cryptocurrency, and critics have their place. But JP Morgan themselves forayed into decentralized finance with the first DeFi trade from Singapore dollar into Japanese yen with SBI Holdings. I think that was in November of this year. They're also launching the JP Morgan digital wallet. We've seen Fidelity do something similar. So institutional interest is growing in this space. But I think without the roller coaster ride of a bull run, we're going to see a lot more maturity come in its absence.